I have nearly £100,000 in the FTSE Global All Cap. That's over half of the total amount of money I have invested. However, with global funds becoming cheaper over the last few years, it does beg the question, is it still a good investment? Now, I'm invested literally into this fund, so there's a danger I may be a little bit biased, but let me give you my honest thoughts on whether I ultimately think the FTSE Global All Cap is still a good investment. You'll often see it talked about online, and I have quite a lot of money in it, so I thought it'd be worth making a full video. Of course, though, I'm not a financial advisor. This is just my opinion. Let's talk about the pros, and then we'll come on to the cons. So with the pros, it is as diversified as possible. The reason being is because this fund includes small cap stocks, which means it really is a true global fund. When you think of the global stock market, you want to invest into developed and emerging markets, but you also want to really invest into all sizes of companies, large, medium, and small. This one fund does all of that, so it's truly as diversified as possible. And that really is the main pro. Most of the popular global ETFs on the market, I'll flash up a few on screen, don't include small cap stocks. That's one of their shortcomings. Now, whether or not you actually want to invest into small cap stocks is a good question, and we'll come back to that in a second. But by using this fund, it really truly is a one and done approach. It's the only fund you need in your portfolio to get proper, full global equity diversification. So it's a one and done, set and forget approach. And I think, to be honest with you, even though the fee is 0.23%, it's still a very low fee for the amount of diversification you're getting. It includes over 7,000 stocks at the time of recording. As a quick note, this ETF is available, which also includes small cap stocks. However, there's currently no pound version available for UK investors. What are the cons of the FTSE Global All Cap? Well, as we've alluded to already, it's higher fee. With global funds nowadays, you can get global exposure for 0.12%, which is half the price of the FTSE Global All Cap nearly. Secondly, one of the main limitations is, as it's a mutual fund rather than an ETF, it's not accessible on that many platforms. The legacy old school DIY brokers have the FTSE Global All Cap, Vanguard, obviously, Hargreaves Lansdown, AJ Bell, Fidelity, but most of the low-cost DIY brokers, Trading 212, Invest Engine, Lightyear, don't offer mutual funds, so they don't offer the FTSE Global All Cap. However, the one low-cost DIY platform that does is Freetrade. But this mutual fund isn't as available as some ETFs like Vanguard's FTSE All-World, which is essentially on every investment platform. That are really the main pros and cons. As a couple of more general points, of course, it's still very heavily concentrated in the US stock market because it is a market cap weighted global fund, and is also 100% invested in the stock market, so it's more volatile than if you had a stock and bond approach. Let's talk about small caps. So this fund includes small caps, whereas most of the popular low-cost global ETFs don't include small caps. The reason why is funds like the FTSE All-World or the MSCI All-Country World Index, they track large and medium-sized companies, whereas the FTSE Global All Cap tracks all size of companies or all market cap sizes, large, medium, and small cap stocks. The first thing to say is small cap stocks only make up about 10% of the global stock market, which is why, as I'm going to show you in a second, the returns are very similar with the all cap compared to the all world. And to be honest with you, the inclusion of small caps can be a pro and it can be a con. It really depends on the time period. Supposedly, by investing into small cap stocks, there is a premium, a small cap premium it's called, which essentially means because small cap stocks are riskier, we should expect higher returns. And over the really long term, small cap stocks do improve returns slightly in a well-diversified portfolio. But there has been decades where small cap stocks have underperformed large and medium-sized companies. And I think right now in recent years is one of those times due to the dominance of the US tech mega cap stocks. So depending on what country you're looking at, what period you're looking at, and who you're talking to, they might think small caps are a great investment or a bad investment. And ultimately, if we look at the last 5-year returns of the FTSE Global All Cap versus the FTSE All-World, as you can see, the FTSE All-World has actually beaten the FTSE Global All Cap by a few percentage points. And that is because small cap stocks have underperformed relative to large cap stocks. What's interesting as well, if you look on Vanguard's fund pages, you can actually compare the two, and you can see there are some quite big differences from year to year between the all cap and the all world. However, when we zoom out over the last 5 years, and this chart is from TrustNet, you can see that, yeah, the returns are still largely the same. There's not really much between them. And that's ultimately because small cap stocks make up a very small part of the total global stock market. One of the problems with investing is that different styles come in and out of fashion. There's growth stocks, then there's value stocks, then there's small cap stocks, then there's large cap stocks, there's AI stocks and tech stocks, and then there's electric vehicle stocks. There's always a new flavor of the month or flavor of the year, and that changes from year to year, which is why I think the best approach really is to decide whether you want small cap exposure or not. If so, add it to your portfolio, whether it's through one fund like this that includes them, or you can add a separate small cap global fund onto your existing global ETF to be fully diversified and then stick to it for the long term. I think, though, to be pretty blunt about it, whether or not you do or don't include small cap stocks is unlikely to derail your retirement plans. It just really depends if you want them in your portfolio or not. There's extra risk, but there could potentially be extra long-term returns, or that's what the data has shown over the long term anyway. But as I mentioned, the actual extra return is very marginal, and it is very period dependent on what country and period you're looking at. I think the overall conclusion on small cap stocks is if you want to be as diversified as possible, it makes sense to include them in your portfolio. However, the con is going to be slightly higher average fees across your portfolio. Now, as I mentioned, this is a mutual fund. It's not available on that many platforms, particularly the low-cost DIY brokers. So you actually can recreate this using two ETFs, a global ETF and a small cap ETF, and actually get average lower fees compared to this. For example, if you use the ACWI Global ETF, the fee is 0.12%. That invests globally, but it doesn't include small cap stocks. If you then added in this iShares Small Cap ETF on top, which is a global small cap ETF, the fee of this is 0.35%. If we then weight those accordingly in your portfolio, you can see that your average fee across your investments is actually much lower compared to the FTSE Global All Cap, where it's 0.23. It just depends if you want to pay for the sort of simplicity of just having one fund that's going to auto rebalance for you or not, or whether you're happy to have two funds and maybe manage it a tiny bit more from year to year. Another point worth mentioning is that although this is a higher fee, because the fee is already so low, it doesn't actually change your ending result too much. If I flash up a compound interest calculation on the screen now, let's plug in an 8% average annual return to start. This assumes we pay no fees at all. You can see what we end up with. If I then minus that average return by 0.12%, which is what the ACWI ETF costs, our return, of course, is slightly lower because we're paying that fee, but it's not a huge amount of difference. If I then take away the FTSE Global All Cap fee, which is an extra 0.11% or 0.23% in total, you can see once again, of course, we do lose a five-figure sum, but it's not make or break for our long-term retirement goals. So I guess what I'm trying to say is the higher fee isn't the end of the world, and it could be worth paying that fee if you want the simplest approach and you want to be as diversified as possible. But then again, excluding small cap stocks isn't also the end of the world. So yeah, it's not make or break either way, to be honest. The next question is, am I personally going to change my investments? And to be honest with you, I don't think I will. Vanguard have been cutting their fees across loads of their funds. So I really hope this fund is the next in line. If this comes down to 0.2%, 0.15%, it would be dreamy and I would absolutely love it. And it really would probably put this fund a bit more back on the map. But I don't plan to change my investment approach just because I personally want to be as diversified as possible. I want that small cap exposure, and I find it easier to do it just through one fund that auto rebalances itself. Saying that, I think the bigger problem with Vanguard is actually the platform fees. Luckily, I'm over the 32K threshold, so my platform fee is 0.15% rather than £4 per month, but I could actually use a zero commission broker and save on that fee. So potentially from the next tax year, I might start a new stocks and shares ISA. And if I choose a low cost broker that doesn't offer this fund, then I'll be at a dilemma which global ETF to use and whether I actually include small caps or not. So subscribe so you don't miss that video when it does come around. But for now, I'm going to stick with that. Cop the higher fee for the extra diversification. And just to reiterate, this fund gives very similar returns to the FTSE All-World, and the FTSE All-World, the biggest and most popular global ETF, once again gives almost identical returns to the other popular global ETFs. So it's definitely not the be all and end all. Don't try and spin your wheels on it too much. just pick one and stick with it for the long term. I hope that helps. And if you invest in the FTSE Global All Cap, please let me know in the comments below what you've personally done, whether you've stuck with it or switched to a lower cost global ETF. And if you're looking for what the best global ETF is, then click this video on the screen. I sent you in through all of the most popular global ETFs and I ranked them from S tier to F tier. So if this fund isn't available on the platform you're using, watch that video next and it will help you pick the best global ETF. Thanks for watching.